This conversation is powered by Google Illuminate. Check out illuminate.google.com for more. Welcome to today's discussion. We'll be diving into the article Impact of Recent Economic Changes in the United States, which analyzes the effects of recent economic policy shifts in the U.S. The article points to both intended and unintended consequences. What are some of the key policy changes discussed?
The article highlights several significant policy changes, including the imposition of high tariffs on imported goods, extensive government worker firings, sweeping cuts to federal agencies, and mass deportation of migrant workers. Each of these policies aim to achieve specific economic goals, but the article argues that the overall impact has been largely negative.
Let's start with the tariffs. The article suggests that while the intention was to boost domestic manufacturing, the result has been inflation and stock market instability. Can you elaborate on this?
The tariffs increased the cost of imported goods, leading to higher prices for consumers. This inflationary pressure negatively impacted consumer spending and created uncertainty in the stock market as businesses faced higher input costs and reduced profitability. The intended benefit of increased domestic production hasn't fully materialized as the negative consequences outweighed the positives.
The article also mentions retaliatory measures from other countries. How have these impacted the U.S. economy?
Retaliatory tariffs and trade restrictions from other countries have significantly reduced U.S. exports, harming industries like agriculture, automotive, and technology. This has led to decreased revenues and potential long-term damage to the global market share of American companies. The decline in tourism due to strained international relations further exacerbates this issue.
The article points to job losses in the public sector due to government worker firings. What's the broader economic impact of this?
The loss of public sector jobs has reduced consumer spending, creating a ripple effect throughout the economy. This reduced spending power further contributes to economic contraction and undermines growth efforts in other sectors. The increased strain on unemployment support systems adds another layer of economic burden.
Cuts to federal agencies are another significant policy change mentioned. What are the consequences of these cuts?
Reductions in federal agencies have resulted in decreased funding for critical public services, including regulatory oversight, infrastructure development, and research. These services are essential for sustained economic growth and innovation, and the reduction undermines long-term economic health.
The mass deportation of migrant workers is another controversial policy. What are the economic consequences of this action?
The mass deportation of migrant workers has created labor shortages in sectors heavily reliant on immigrant labor, such as agriculture, hospitality, construction, and healthcare. This labor shortage has slowed economic productivity and increased operational costs for businesses. The article highlights that these jobs often require specialized skills or are physically demanding, making them difficult to fill with the current domestic workforce.
The article does acknowledge some limited positive outcomes. What are those?
The article notes that tariffs have temporarily increased government revenue, which could theoretically be reinvested in infrastructure and domestic programs. Additionally, some companies have relocated manufacturing operations back to the U.S., creating new employment opportunities in specific areas. However, these positive impacts are dwarfed by the broader negative economic consequences.
The article concludes that the economic costs of these policies far outweigh the benefits. Do you agree with this assessment?
Based on the evidence presented in the article, I agree with the conclusion. The policies have undermined several critical pillars of long-term economic health, including stable international relations, robust trade, steady employment, and sustainable inflation rates.
What are some potential solutions or policy adjustments that could address these negative impacts?
The article doesn't explicitly propose solutions, but it strongly implies a need for policymakers to reconsider their current strategies. A more balanced approach that prioritizes stable international relations, sustainable trade practices, and a focus on long-term economic health is crucial. This might involve reconsidering tariff policies, investing in workforce development programs to address labor shortages, and prioritizing public services essential for economic growth.
The article ends with a quote by Thomas Sowell: "The first lesson of economics is scarcity. There is never enough of anything to satisfy all those who want it. The first lesson of politics is to disregard the first lesson of economics." How does this quote relate to the discussion?
Sowell's quote highlights the inherent tension between economic realities and political priorities. The policies discussed in the article seem to exemplify this tension, prioritizing short-term political gains over long-term economic sustainability. The scarcity of resources and the need for efficient allocation are often overlooked in the pursuit of immediate political objectives.
The article focuses on the U.S. economy. Do you think these findings have broader implications for other countries?
While the specific policies discussed are unique to the U.S. context, the underlying principles, the potential for unintended consequences of protectionist trade policies, the importance of stable international relations, and the need for a balanced approach to economic policy are relevant to many countries around the world. Other nations might learn from the U.S. experience to avoid similar pitfalls.
What are some of the limitations of the analysis presented in the article?
The article provides a compelling overview, but it would benefit from a more detailed quantitative analysis of the economic impacts. Specific data on job losses, inflation rates, and changes in trade balances would strengthen the argument. Furthermore, exploring alternative explanations for the observed economic trends would enhance the analysis's robustness.
This has been a very informative discussion on the economic impacts of recent policy changes in the United States. Thank you.